Fantastic. Next time, get the streaming key correct, motherfucker. All right, let's get rolling. You know the routine. Crack open. I'm getting sick of Spotify. I'm not gonna lie. I got far too many playlists to sift through. Let's pull something. Let's get a different vibe going here than the last one. Yeah, it's a lot. Music playlists. Oh, here we go. Here we go. This be great. Let's check our levels and we're good. There it is. I'll turn my side up. We should be good. Oh no, I do not want to hear that actually. I changed my mind as soon as I heard it. The moment it came on, I was like, nah, we're good. Also don't want to hear this. I think I changed my mind about the type of music I want to listen to, actually. Can't go wrong with this though. Oh, that's fire. The notifications that I get now on X or that you get, that's fire. I could join my own live. That's fire. All right. So good evening. It is kind of late. We're going to move quickly. Let's get a little review on what happened today in the market. Daily chart. If you're in Telegram and you want to be my audio wingman, Just let me know if or let me know what the audio levels are like for you guys. That'd be fantastic. Thank you. I ask that every time because I'm streaming to like 10 places at once now. No music, that works for me. You guys want music? You want music? I'll turn it up for you if you want. You're listening on X. That's great. I appreciate that. That gives me a little bit to work with. I figure it's easier for some people because some people get distracted, you know. So the overall goal is that if it has to be on in the background for you guys, I want it to be as low as possible. For me though, it helps me think, and it also allows me to stay uh, fluid and engaged. Sometimes I get some cool ideas from it. As crazy as that sounds, we can take a vote though. If you want to take a guess what I'm listening to, got to keep the copyright clear. Yeah, I have zero problems clearing anything, but we don't. Of all people, Dr. P, you should know that. But we're not going to talk about that. We're not going to talk about that on stream. At least not this time. All they want is royalties, brother. That ain't a problem. I'm well connected. All right. Also, Shred knows. I like this because I can take this here. I'm gonna keep it here, but I'm gonna clone it. Just as an example for you. You can see this happened twice, but it's not perfect here, but we'll just move it. And I'll just clone one more. And we'll bring it from here to here. Both of these things happen, by the way. Now remember, I drew both of these, this red line and this green line, last time I was streaming. Let's sit on and reflect on that just for a hot second. Let me just pull some stats up. Let's see, restream. That works for me. This is what it looks like when I'm streaming, by the way, to myself, so I can see comments from everywhere. I see chats from everywhere. But primarily, I respond to people that are on Telegram, if anywhere. I just switched to music again. All right. The goal here is to take a quick inventory on what's going on. Here's something that was said that I saw often, or something I see often. People will say, especially in Telegram, they'll say things, alluding to the fact that it's a review and it's helping them share whatever. I guarantee you, this isn't to sound arrogant. It's just, I guarantee you, it ain't just review for you. I guarantee you, there are things you could not repeat if gun to your head. So let's not treat it as if it's just, you're going through the motions and you're sharpening. No, you're learning things. You should be taking notes. You should be an aggressive student constantly. That is the gateway to complacency. Every time I hear that, it reminds me of the fact that, there are people who mentally get themselves into this place where you are responsible for your plateau. The reason you're hitting this wall and you don't see very much growth is because you're constantly looking for that new feeling, that new thing. The new thing that you should be looking for is consistency. The new thing that you should be looking for is the ability to go out there and do things that you haven't done before. You should be experiencing growth. It should show up in everything that you do, you should see new waves. I have yet to meet a trader, and I mean this. There are zero exceptions to this rule. Get mad about it. I have yet to meet a trader that has hit their ceiling. I have yet to meet a trader that has gotten close to their ceiling. I have yet to meet a trader that didn't have, from a conversation, if I have a conversation with a trader, I have yet to have a conversation where I hear things and I say, that's not quite right. This isn't a critique because everybody does things differently. But if I'm having opinions on how you're doing things and I'm thinking those things, okay, well, everybody has room to, I don't even want to say improve, but improve your process. And the same people who I still see traders who don't post their charts every day, who don't share their stuff every day. There's zero reason, 5 days a week. There's zero reason. Like, I know some people are going to take offense to this. That's okay because growth hurts. You got to go through pain in order to grow, right? So, I mean, you shouldn't be hurt by this though. Like, anyway, there is zero reason for anybody who says they want to be successful as a trader, period, right now in this stage of the game to not be sharing what they see in the market every single day. And I say it, and people are like, yeah, SP, all right, high five. Hell yeah. Hell yeah. Thanks, SP. Although I didn't get any thanks for the last time I did this, by the way. Um, they just take it for granted, but it's all good. But they'll be like, yeah, hell yeah, high five. I'm gonna share how much money I made, but I'm not gonna share my process. Come on, man, get the fuck out of here with that. Excuse my language. Like that's bullshit. Excuse my language again. That's two flags on the play, 15-yard penalty. Repeat first down. But seriously, like I'm every time I see that, I'm just looking. I'm just letting you know I'm judging you. I'm looking at it every time, and I'm thinking to myself, well, you're hearing me, but you're not really hearing me. You're still thinking you know what's best. You know better than me. Okay, let's see how that works out for you. You have to put it in motion. If you're on Twitter and you're watching this in or whatever, X.com, sorry, Elon, you're on X.com and you're speaking into the void, that's even better. You ain't got nobody judging you. You need to take your charts, take what you see, post it every day. You think you can just get to this, to doing this every time just by watching? No, it happens by doing this repeatedly. I've probably shared, I don't know how many thousands of charts. I honestly, we could look in Telegram right now. We'll find at least a few thousand literally from the last couple of years, but every single day. And if you say, "Oh, I'm not confident," who gives a shit? Excuse my language. That's the third one. I promise I'll stop cursing after this. Who cares? Like grow up. What do you mean? I'm scared what somebody's gonna think about my chart. Bro, your kids are gonna think about you differently if you say you're gonna do something and then you don't do it, and then later in life you tell them, "Hey, you should go after what you believe in." They're gonna say, remember that time you said you were doing this and you didn't do it, you didn't follow through?" You're gonna look yourself in the mirror and say, "Oh, remember that time you said you were gonna do this?" Like words are an oath. You don't have to say "I promise" or "I swear" for it to be an oath. Words themselves are an oath. That's why when people put effort behind those words, something magic happens, right? Change happens. The other thing you could do is just not say anything at all, but it's too late. You've already made that commitment to yourself. So the point I'm making to everyone out there is literally not just do what you say you're going to do. No, I mean, understand the benefits behind activity. We don't become what we think. We don't become what we say. We become what we do over time. That quote is misattributed to Aristotle often, I know, but constantly doing it, constantly working, constantly putting the time in. Like, you think I want to be here doing this right now? This doesn't benefit me in any way, shape, or form. I roll out of bed, I look at the chart, I say, this is the trade I'm going to take to myself. I don't even have to say anything. And I can do it. Bam, there you go. I can work a few months out of the year. I'm just being real. Like, you guys have seen me do it. I do it all the time. The last 9 trades are on record from the last 3 weeks. Is same thing. Not much preparation, not much talking about it beforehand. If I weren't posting in Telegram, you know what I mean? I wouldn't talk about it at all. I'm only saying that to help light a fire because I feel like people are falling into this mundane nonsense, this constant going through the motions. It was just March yesterday, and you're like, yeah, I'm gonna, take the summer. I'm gonna do this. I'm gonna do that. And you looked up, and fall blew right past you. knee deep into winter and you got no plans, you got nothing to show for it. I'm not talking about financially. I'm talking about your process is the same, your mental is the same, your thought, your work ethic is deteriorated over time. Like that's your fault, man. That ain't got nothing to do with nobody but you. You can make every excuse you want. Like we all will make reasons for what it is that we do. I'm not perfect. There are times where I say, nah, I don't really feel like doing it. But to me, that's a trigger. The moment my brain says, I don't really want to, my body jumps into action and says, nah, we know what this is. This is poison. This is a trap, right? This is the part of your brain that's looking to hold you back, is trying to stop you from where you know you need to be and where you need to get to. So if you're on Twitter, x.com, and you have no followers, or make a new account, who cares, right? Start committing to getting whatever charting platform you use currently prior to you using versus the market, and you decide, I want to get really good at this. Sure, there's the roadmaps and everything that you're going to see from us, but right now, do what you can with what you have right now. Start posting every day, and it's going to be mundane, and it's going to be boring, and you're going to get tired of it, and you're going to feel like, what's the point? And you're going to look at your chart and say, damn, the chart didn't work out the way that I thought it would. And you're going to look back and say, dang, I was wrong about this. And you're going to look at it and say, I was right about that, and I should have taken that trade. And you're going to feel regret, and you're going to feel fatigued, and you're going to feel tired. And at the end of it all, you're going to look up. And for those that continue to do it, you're going to look back and your friends or the people that you started trading with, a year prior, they're going to say, hey, uh, how did you do that? Or I've seen you have success here and there. How's that working? How is that happening? Or what did SP mean by this? Or nice job. Where can I find these resources that you use? Or I saw so and so mention this in the group chat, and I'm too shy to ask, how do I go about doing this? I've seen it happen over and over and over and over again, and only the people who are consistent will ever see anything from this. If you're just watching this stream and you're doing it casually and you don't have any intention of doing any work, I'm telling you right now, this ain't gonna do nothing for you. You know what I mean? I mean, this might do something for you at Thanksgiving dinner. Thanksgiving dinner's, it's already passed, where you can sound like you know what you're talking about. Maybe Christmas dinner, like, cool. And the only reason people you might roll your eyes at this or whatever is because, I'm telling you the truth, because you're not doing what you should be. You ain't where you should be because you didn't do what you were supposed to do. All I'm telling you is, I'm not slapping you and saying, hey, ha ha, you didn't do what you were supposed to do. I'm saying, hey, get off the ground. Like, what are you still doing on the freaking floor? Things happen to everybody. Get off your ass. Like it doesn't take much, and people undercut the effort part of everything because they're lazy as hell. I get it. We are all lazy naturally. We don't who wants to go and do something they don't want to do? That in itself is a paradox. But at a certain point, you got to realize this is a requirement. It's necessary. So that's my rant. And I ain't speaking to you from a soapbox. I'm coming to you from the trenches because I've been here, MFer, when you weren't. Understand that. So nobody, don't ever look at me like I'm looking down on you. If I'm looking down, it's only to help pull you up. Damn, that's a quote. Put it on a shirt. Thanks. On to the chart. Price action. We have seen we have seen a lot of things over the last few days. But the one thing that has been persistent is that the market has seemed to try to trade up, and we haven't seen any crazy rejections. We have not seen anything that we look at and say, it's the end of the world. It's the end of the, that has not happened. Instead, it's traded sideways and it's kind of leaned, and then you see a few breakdowns here and there. I'm not here to tell you that that's all price action. There are some things in options or in the options conversation that we could talk about a little bit more, especially when it comes to volatility, especially when it comes to Bitcoin and, MSTR joining the queues and everything else. Volatility overall is going to be a topic of conversation going forward. However, if we go to this daily chart right now and I remove all of the annotations, hello, I see something that maybe you don't see. Maybe we see the same thing. You might remember I talked about this channel upwards, right? And how it seemed almost like it was reluctant. to trade to the upside, but it didn't. There has been no major breakout. It's just been slowly getting there, and in just a couple of days, it has made a move back. I'd be willing to say that this candle here and this one, like this move cancels these cancel each other out. Not This is not price prediction. This is simply saying, hey, we broke above a major pivot at 600. Okay. Market could have easily cracked back below 600 and it didn't even come close. Okay. So I'm already dispelling this idea that, we're at the top of some, whatever, this major price action and we're getting ready to see some major trip back to the downside. Yeah. If anything, I would say, maybe this floor is being built now. That's how I would look at it. Now, let's talk about how to make something from that 65-minute chart. I could draw a lot of patterns from this. I could talk about a lot of activity. We could go into some trading books even and specifically, Wyckoff methodology. But we're not going to do that. All we're going to do is keep it relatively simple. You know what this is? Some people would say, oh, it's distribution. I'm going to say it's not the 1950s. Let's stop talking like that for a hot second. Instead, let's say there's been a few major pivots we can identify. And in addition to those major pivots, once again, we're going to say 600 and 610, right? And maybe 605. In addition to that, we should be using volume to kind of anchor and understand where price has been moving. But we should acknowledge the fact that price did completely avoid that very obvious 610. And in addition to doing so, it did not have any major breakdowns or sell-offs. That tells me there's some indifference here within the market. Step one, we're going to go to the economic calendar and have a quick peek at what we are anticipating for the rest of the week. As you already know, tomorrow we are expecting some macroeconomic data that could shape or help shift things. That is the CPI. CPI is or for November, and the year over year as well as core CPI year over year, and then 2 o'clock the U.S. federal budget, which we can skip. So 8:30 pre-market. We know we got some activity showing up. What else? Well, we got jobless claims, etc., as well on Thursday. So we got 2 days where maybe the market is going to be a little apprehensive. Now, before we dive into that, because I don't want to delete or get rid of my annotations just yet, with that in mind, let's talk about today's trade just very briefly. Today, I traded to the downside, and I don't know what time that I did that, and I don't really want to look, but for posterity, let's have a quick look. I was supposed to review yesterday's trade as well. I didn't, but we will talk about that briefly. I think both times I traded to the downside. I said a lot of stuff in the chat earlier today. At around 11:06, 11:06 for me. So um, let's find it right here, right in here. Now, I'm not here to tell you that the lines that I drew were responsible for whatever, anything like that. Like there's some correlation. We know that. We know how that works. We know that the lines that I had drawn last week, we could place them here and they would probably still play a factor. But what I'm here to show you is more so part of the pull counter setup, which is a trade setup that I developed on my own from monitoring price action. You know that price action itself is the thing that I rely on more than anything else. No patterns, nothing. But I know that that's not always the most helpful for people who are trying to see things the way that maybe I see them, or in a way that they can duplicate or learn for themselves. So we will annotate the chart just a little bit here. Okay. The rejection here is probably when I started looking at the market, because I saw that there was a chance that maybe it was trading sideways and that there could be a bounce. In fact, within the Telegram, I said something along those lines. I said the market found support near each image of it's going to be hard to explain, but Brian Branch flipping off the Packers fans because there you go. As you know, I'm a Detroit native and a Lions fan, so get over it. But one, two, three, these three different spots. I noticed that on this 65-minute chart, this is where price action or where price had moved to. And there was a chance that it will find, it will be a bounce there. There was a chance. I really want to continue to emphasize that the only thing that I thought was there is a chance that this could happen. There's a chance this could happen. There's a chance it could happen. There's a chance it could happen. I think people need to ingrain that into their mentality and their vocabulary. There's a chance it could happen. There's a chance it could happen. I see this, and there's a chance this could happen. I see that, and so there's a chance that this could happen. I see this, and there's a chance, there's a chance, there's a chance. Only a chance, only a possibility. That's literally square one. That's it. It's the only thing that you'll ever hear me say to start. Why? Because that's my trigger. That's the hey, it's time to pay attention. It's time to put what you know into action. And so that was, for me, that was it, right? Because everything else, the market had just been, again, just trading sideways. I didn't really want to be bothered with any of this. I had some other things going on. But once I saw this, I thought to myself, well, if the market is concentrating the volume here in this one spot, and by concentrating, I mean we take, let's do week to date. And we'll just move this up here a little bit. Actually, you know what? We don't need it. I'll remove that. So around here, I'm thinking, well, there's a lot of activity happening. And yeah, potentially there is a bounce. So that's how I went into this. But reviewing the price action itself, when I mean price action, I mean watching price move. I don't watch candles form. I don't watch candles move. I watch the price over here. I'll say it one more time. I'm not looking at any of this. I'm watching price over here. Super simple, super easy. That's why I took the trade. That's it. But I'll read you what I said at the time. Where the market is currently, that was support in a pre-market session. There's likely more downside, possibly where the volume has been concentrated. Mental pivot 603.50, 602.50. Ideally, I am going short. I emphasize pre-market because it is not pre-market right now, therefore making that particular bounce less relevant. So what I was referring to was the 65-minute chart being here. And when I started to pay attention to where price had bounced from, right? So we're going to say, excuse me, we're going to say at the time, market was up here somewhere. So, one here. This is the pre-market part I was telling you about or was referring to. And I said, I'm going to disregard this because of that, because it was, again, pre-market session. So I wanted to find where's the next area of support, basically. And that was within this area and here as well. That's it, because we only have a gap here, right? So, and we could also say within this range, what price already cracked this area or had already broken below that. So that's where I ended up taking the trade and going short. There's some other things that we can add to it, but essentially, this combined with what I like to refer to as the pull counter or the setup that I created and typically trade is, price failing to create new highs and to make weaker highs. Now, this ain't something you can be able to just draw a trend line on and say, oh, there's lower highs here, so this is where I should go short. It's a decent theory, but it only works when coupled with the price action itself and the other things that I just mentioned. So when price was rejected here at this spot, right? This is when I started to keep an eye on it and I watched the price action and I thought, well, it's veering away from this concentrated volume on the week. All those things combined, I think we got something here. And so in entering my trade or trading it short from here, this is essentially how the pull counter works in a very brief or very light overview. What I think you could take away from this is the fact that volume and support combined don't mean bounce. They do not equal reversal. And that's an assumption that a lot of people make. I'll give you a couple seconds to write that down. Something I said was some books and FinTwit logic would tell you that the bounce should have happened. I tell you that price action remains the only true indicator. That was at 11:16. Interesting. So this was after, a low was made and price was breaking away from volume on the week. You see how easy it is to make that assumption? If you only look at these 2 days and you say, oh, there's support and, it should bounce from here. I got no problem with that thought process. I got no problem with that idea, but I see how it's flawed because it's missing the key ingredient, which is the price action, which is going to come from you watching the market in real time or replays of the market and having some understanding of what you're looking at and why. And also, once again, practicing that practice. Once again, I mean taking these charts, saying, hey, here's what I see. And I know it feels stupid at first. It feels like, oh, I feel kind of goofy. I feel silly. Why am I posting what I see in the market? Why am I posting this chart? Why am I posting that I see price doing this? Why am I taking an addition, 15 minutes out of my day to do this when I could literally be on TikTok right now, right? Or for those who don't use TikTok, let me try this again. Why could I do that when I could be arguing with a family member on Facebook about our political views? I know it takes you a good 15 minutes to come up with a rebuttal for your aunt, and hey, listen, she's experienced, okay? Right? You got to bring your best stuff. However, the reason you do this is because not only is it muscle memory, it allows you to chart things, but also keeps your head clear and you can see more as you become more familiar with things. Remember the first time you got on the freeway as a driver? First time you get on the freeway, it's kind of scary, right? First time I drove on the freeway, I think I was 16. And I remember this was no, I was 17. I was in Dulles, Virginia. This was like right as soon as I moved to DC. Scary because a lot of things moving on. Now, you get on the freeway, it's like, dude, could you people come on? You don't know what a zipper formation is when you're merging. You know what I mean? It's the more familiar you are with your surroundings, the less uh I won't say the less overwhelming it'll be for you because different things for different people, right? However, but the more familiar you are with the surroundings, as noisy as they may be, the better your decision making is going to be under pressure. And most likely, the more it'll fade into the background and allow you to think clearly and to see things that you wouldn't have seen, when you first started. So this is one of those times. Price tries to break out, fails to make a new local high, breaks down further, tries it again, breaks down further, and that continues. That's like the simplest way of putting it. Let's do day to date instead of week to date. So 1 day instead of 2 days. Cool. One thing that people make a mistake doing all the time is looking at what they can see now and then thinking, well, here's the volume. And so here's how I need to frame this trade. But the reality is during the day, we didn't have this. This is the full picture for the day, right? So when it was time for that trade, we need to analyze what it looked like at that time. So I'm gonna go from here to here. So I can see this is what I had to work with at the time. This is what the volume looked like at the time. Okay. So at the time, I realized that price was starting to make new lows and break away from this area and not put up a lot of volume here, not a lot of transactions down here. So you could easily say, hey, here's this gap, and maybe price avoids this gap altogether and breaks out. I knew that was a very real possibility. So there's two sides to this coin, right? There's lack of activity and potential to break down further, or lack of activity and potential to break out. Price action is the tiebreaker there. That's for all of my, if this, then that traders out there and analysts out there. If this, then that doesn't do anything for anybody. Okay. So let's have a look here. There we go. So some volume was building down here. Activity was building, yet price was not bouncing. If we see volume building like this, assuming a bounce is totally normal. I'm not faulting you if you see that. But when you've cracked the pre-market low and you're making new lows, and when you zoom out on that 65-minute chart and there's no other semblance of this being support that you can identify, and you look at the price action and it's telling you, and you see price breaking down. If you want to learn more about price action, you're going to have to stick around with us and with Versus the Market as a community. But if you see this, we should understand that this is buy and sell orders. This is not all buying. You will not believe how many times people will message me and say, hey, I was under the assumption that more volume meant that there was bullish activity happening. Well, no, bullish activity would be defined by orders hitting the ask price, technically, and that would be reflected in the price moving up. Once again, this is why price action itself is the key there. So a lot of orders, a lot of transactions happening, price breaking down further. This tells me that just as there are buy orders, there are sell orders, just as there are those who want this to bounce, there are those who want to see this break down, just as those who want to buy, there are those who want to sell. That's all it was. This was validation of my trade, essentially. This was uh, able to dispel the idea that there were no orders taking place down here because then the market would go where the money is, which would be above. See? That's why we want to see transactions happening as the day continues, even down here. Doesn't necessarily mean that a bounce is going to occur, as you can see. The funny thing about that is, as the day continues, you can see where there is a quote unquote addition or no eventual bounce. There's also volume to validate that. Anything I do, I use deductive reasoning so that I can prove that this is a requirement in order for this to happen, right? To avoid that trap. So anyway, that's how it worked for me today. But if you really want to apply a certain technique, that's going to take a little bit of time. It all starts with putting in the effort. I don't care if you don't know what you're doing. Guess what? There was a time when I looked at these charts, I didn't know what the hell I was looking at either. Maybe not these charts in particular on this site, but you know what I mean. Anyone who's ever great at anything was once a beginner. I am no exception to that. Now let's talk about the price action. These lines, all this stuff is cool. Yeah, price moved a way that I thought it would, and yada yada yada. That's all that stuff is great, right? We ain't here to talk about that. What we are here to talk about though is a little bit of a trend I've noticed. It is an initial move that has happened throughout the course of the day, right? Like this is the market pulse. The market has moved with a certain kind of energy, and then you notice some indecision and a bit of sideways activity, sideways action. So I haven't been trading right at the open. I've been trading once I see price move near something I'm familiar with, something that I've charted from before. So guess what? That's what we're here to do today is to create some areas of familiarity so that when price does move within those ranges, I have a plan of attack. I'm gonna get rid of this one. I'm gonna get rid of this one. I'm gonna keep I'm gonna keep these just because I feel like it'll be fun to do later. Let's start identifying these actual pivots. 65-minute chart is probably a good place to start. And what I'm gonna do is I know we have data that could potentially throw this chart completely out of whack. I know that there's, I can draw patterns here. I'm ignoring this head and shoulders pattern that happened here and the breakdown that happened after. It'd be really easy to say that's why that happened. And so let's identify some patterns here. But I'm not going to do that because I'm not here to lie to you. Instead, I'm going to say, let's keep it simple, right? Let's start with a little bit of simplicity here. The simplicity that we're referring to right now is just like, what do you see when you look at this? Just take 15 seconds and think about it. Think about whatever it is that you see. Write it down. And I don't mean trying to quote a book or try to identify a pattern. I know that knocked out like 90% of you right there. What I'm saying is, let's keep it super simple. This was an area of support, right? Come on, keep it simple, dude. Right? Ceilings become floors. This was once a ceiling right here and right here and right here and here and here. And eventually, on this 2 hour chart, it became a floor. And we saw it be a floor here, and we saw it be a floor here, and we've seen it be a floor here. So we're talking about an eventual area of support. I think it's okay to create some sort of pivot. I even have that gap that we created in the past. So what I'm going to do is I'm going to take the volume first because I like to use volume quite a bit. And I'm going to go, let's see, month to date. Month to date. Wow. There should be no surprise here that there has been a lot of activity. So this also adds to that validation that this is a relatively strong floor, not because there are orders there, but because orders have been there for whatever reason, maybe because they have, positions that validated they buy SPY. Maybe they write options, maybe their, buddy that's a quant across the, the street at a different firm dared them to. We don't know. We don't care. We don't need to know. We don't need to speculate on that, right? It doesn't matter. The reality is they bought a lot of it here. And so that's what I'm here to pay attention to. Okay. So this area, this range that we even saw today, 603 range, this, I'm going to pay attention to this as a floor. But what I'm going to do is I'm going to use my eyes that God gave me and I'm going to drag this line over just a little bit more. And I'm going to pay attention to what the next area is, what gaps we see. So a lot of volume traded in this range. Notice how when I drag this over, we see a little bit more here. This is good. What happens if I just bring this over a little bit more? Just curious. Bam. Love it. And a real gap that we can identify. Despite price being here for a little while, there's a significant gap. So what I'm going to do here is I'm going to try and define what these price points look like. Look at that, 602.50. There it is. So for me, let's take one of these. Well, let's not use the closest one. Let's use one of these up here. I'm going to just unlock it first. And I'm going to bring this down to 602.50. Hello. Isn't that easy? Isn't that simple? That's how it's supposed to be. Let's keep it rolling. What's next? Well, we know that we can see or we have seen a gap elsewhere. I'm going to use this. This is 604. I think I liked 603.50, but this is a decent bounce spot. All I'm doing with this is just paying attention to the fact that if I see price hanging around here, I now have some frame of reference. Now let's move on to the next part of this though. Let's say the market breaks down beyond that. Well, we had some pivots in the past. We know that there was a gap last week in the trading here. So any lines that I utilize or draw, I would like to make sure, let's clone it. I'd like to make sure that I'm mindful that there was some gap in trading here. And I don't like any of these as a pivot. In fact, I can see a gap here from how it traded. So honestly, nothing in this range makes sense to me for this line. None of it does. Only thing I can do is try to find that bridge between ceiling and floor here. This is a little bit more nuanced, but I mean, again, ceiling, 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 floor, floor, love it. All I'm doing here is saying, hey, this was a potential pivot. Let's go ahead and change this actually and mark it as a pivot in the past. And we see that this was also the case here. I'm gonna get rid of these and I'm gonna extend right, lock the figure, all time frames. And I don't want to say expecting activity here. Puts prior, ceiling, and floor here just so I have my reference point, right? Cool. Now I got something to work with. Now we got this huge gap here in the middle we got to talk about. If I were to draw pivot points, I would say, well, there's a ceiling that we saw repeatedly here. And that's at 603, 604. The most relevant spot would be like if we're drawing ceilings and floors, that's going to be this, right? Look at the bottom wicks. Look at the ceiling here, and then look at how many times we saw rejections from here, right? We even saw a gap through it, right? So to me, it's somewhere in this range. The only way to get really specific with this is to go into the smaller time frames. Also, I mean, I'll keep this here, but I don't think it needs to be here, by the way. Oh, look at that. One of our annotations from the past, November volume point of control. I love that. All time frames is visible. Okay. November point of control. We'll keep that in mind. But when we're trying to identify one of our levels in this gap that we just talked about, which is here, I don't think that's the appropriate area or this is the appropriate level. I think we need to bring it down. Maybe bring this one up just a little bit here. Nope, got nothing. We can't use this because there's a gap up here and there's a gap up here. All we would be doing is straight up guessing. If you've been around long enough, you know one thing I do not do is make assumptions on price. I don't say, oh, this could happen, so I'm just going to throw this on the chart. Or I'm just going to do this. It's like an ingredient, you know? You don't just throw random stuff in a recipe. You might not notice it when you're mixing everything together, but when it's time to eat your food, you will realize maybe I should not have put, whatever that's not a part of my usual into the mix here. So I have a process. That process would be invalidated if I start doing things outside of my usual. Now, what we can do though is try to get some level of standardization, right? When you don't know, stick to standardization, stick to doing something that, or stick to standard units of measurement when it comes to time. So week to date. Week to date, volume is concentrated here. This is 604.50. Guess what I'm using for my pivot? You guessed it. It's 604.50. Not because I'm going to do anything with that level, but because I have some frame of reference. I at least have a point I can say this is where we've seen a lot of activity. And all I'm going to do here is instead of potential bounce, I'm going to change this to, let's maybe make this like, I don't want to use that color. And instead of potential bounce area and everything else, all I'm going to do is put point of control or recent. Actually, instead of recent, let's just put weekly point of control. There you go. Lock figure. What do you know? It's funny how it's literally right there at 604.50. I don't think that's by accident, honestly. Now I've got something to work with. And these areas where it says potential bounce, we can convert these now, right? Or I can convert this to something else. I can remove this horizontal line. I can make this a potential rejection area. I don't even think I created one of these. I have potential bounce. Oh, yes, I do. There you go. Extend right, lock figure, bam. Want to change the colors to get this a little more color coded in a way that maybe makes sense. There you go. Because I mean, it has been a ceiling recently. We saw it here. We saw a price get rejected from there. We saw a price get rejected from there. I'm okay with that. I don't like to read too much into it, but that's not bad. This is as solid as you will see when it comes to identifying pivots. And again, if you've been around or you go look at my charts or whatever, you'll see how often this happens. There are times where I won't need to draw additional lines for weeks at a time. Next, I just want to compare this to the month to date. Now, what are we missing with the month to date? Isn't this funny how I just want to paint you a scenario real fast. Because there's a gap here on the month, let's say price were to try and break out here. Let's say there were only transactions happening here. Well, you could see price break out to this area, and then what would happen? It would eventually fade. And this is about as far as it would go because 605 is, for all intents and purposes, an actual mental pivot I'd be okay using. Price has also gapped through this area. So I do think that this is somewhere to pay attention to. So instead of weekly point of control, I'll put weekly point of control, comma, monthly gap. I want that for my frame of reference or for a frame of reference uh, when tomorrow rolls around, regardless of what happens. And I'll go ahead and change this from potential bounce area to what we got this as. I'm going to go ahead and actually clone this and place that right there. I love it. Lock figure, extend right, display in all workspaces, all time frames. There you go. Unless something drastic happens tomorrow, you're gonna remember this. You're gonna remember you saw this. Notice I'm using whatever time frame. It doesn't really matter because no matter which time frame I switch to, I guarantee you there will be some relevance here. Look at that. Let's try 10-minute chart. I don't know. What do you notice? Doesn't matter, right? The logic and the reasoning that goes into this, it's all the same. Let's continue on because I know it's midweek and I know it's late and I know your kids are bothering you or you've got other things going on. You got work to prepare for. Like, I get it. Now I think we can talk about how to speed run through some of these other names. Now, didn't we talk about Amazon having a bounce area or moving from a particular area? This was, I don't know where I initially placed this chart or where I placed this line, for Amazon, but I guess it was what, 2 days ago. So we saw this happen and it's come back and it's here again. This is great because we saw some upward activity. I already kind of told you that this as a swing trader, this in the longer term is a name that I'm paying attention to because while there are a lot of intraday trades that I can take, just like most people, I would like to be able to have a variance. I'd like to have, I guess you could say, a stable of names that I can move through and trade on a longer time frame and not have to watch so closely. This is one of them. So I will keep that in mind. I'll pay attention to that. Intraday, not going to touch it. Meta, the same thing. It is still sitting in the same area like we discussed before. Square. Ain't that funny? Once again, I mentioned if we're talking breakouts, that's when I'll come back to it. I'll pay attention to it. It still hasn't seen that, has not seen that light of day, but it has come through this area of, if you want to call it support, this as a floor. It's visited it here in this day, and it's here as well. So, same thing, it is on the radar. Right now, we're only talking about intraday trades because that's the majority of the people here, at least right now. Google, yeah, nice breakout. That's pretty cool, but this is not a name that I want to analyze currently for intraday. I wouldn't even trade that intraday. Tesla has continued to just do what Tesla does, which is fantastic. I did get a couple messages about people that took the trade based on what I charted in the session, and that's cool. Let's not make that the reason you take a trade, though. Right? I'm glad it worked out, but don't do that because when it doesn't work out for you or whatever, I'm going to say, I told you so. I'm going to be honest with you. I'm going to tell you that so that you learn your lesson. MSTR. Okay. So again, the move to the Qs is one thing, but I'm not going to have a lot to say about this because it continues to trade sideways and is going to be the subject of a lot of volatility. I will avoid it currently. Coin. I like this. Nearing or at support. It has been support for a very long time. You're going to notice that trend, right? With the sideways trading, at least on this 65-minute chart. So if you want to talk about intraday trades, names with a lot of liquidity like Tesla, I think this warrants coming back to and kind of paying attention to. So let's do it. 15-minute chart. Let's identify some things. Now, mind you, I don't look at the Tesla chart every day. So in real time, we're going to see what I can identify and whether or not, uh, I can do this on the fly or on the spot. First thing I notice, price consolidated here and broke down. That's just the first thing that my mind goes to because that is not what you would consider to be textbook or typical price action. And we can mark our all-time highs and we can mark, our, if you want to call them levels. I don't really think of them as levels, but I think of them as just markers to pay attention. Regardless, we'll go here and 410, extend right, lock figure. I know it has potential to go long, but remember, that's not a trigger. It's just a point of reference for me. The next thing I'd pay attention to is if there are any ceilings or floors or pivots where, we can see price action from a couple of days ago and today. I noticed that that is a ceiling or a point where price was rejected from. And we saw that here as well. And even though price had a couple moments, right, or, maybe an hour or so, I'll say it's a couple hours actually, a few hours where it traded above here, it eventually fell back below that. This is a ceiling. This is your spot right here. That says 404.80. I'm going to call it 405. 405. And actually, let's remove this line and I'm going to put, I don't have a rejection line here. Let's use, yeah, you know what? I got a pretty good idea. So this potential to go long area, I'm going to actually move this over instead. We're going to put 405. I'm going to change the color. And the only, let's change it to that. Actually, yeah, let's use this. And then what I'll do is I will take one of these and I will just change it from potential to go long by calls because I don't need any kind of signal. What I would actually like to put here is former ceiling slash pivot. And I'll remove the arrows. This is important because it's a very particular level. It's a particular area. But then the next thing that I'll do is instead of locking it, actually, I'll drag this over to this point here so I can identify exactly what it is that I saw. There you go. So how do we trade this? Well, we got to continue to add a couple things to this chart. The low of the previous day, that's something that's an age-old strategy. I don't know if the 15-minute chart gets specific enough for me, and I also don't like how tight of a range that would be. Let's make sure this is visible on all time frames. Lock the figure. Fantastic. Go to the 5-minute chart. There's not going to be a lot that you can make sense of here, but what I will tell you is that when a bullish pattern stops breaking out or bullish patterns start to fail, it's time to pay attention to where their ceilings might be or where there might be a ceiling. This is one of those times. How do we know that? Because I could do this and I could take that and do one of those, and you see how weak that breakout was from this. If you even want to call it a breakout, simply put, there's just something overhead. The price action overhead has stopped it. So the way to go about it would be, did it find any kind of support? I think, again, we could say, sure, I could argue that any one of these points, right? Like there's one, two, three, four different candles here before this bounce, and it came back and it touched this area again. I'm going to take whatever the low of the day in the intraday session, which is right here at 398.02. I'll mark that, and I'll actually change this to pivot, extend right, lock figure, previous pivot, expect activity here. And let's change this. Let's make this, I'll call it a potential bounce area. Extend right, lock figure, bam, there you go. Once again, these are for me to pay attention to, and I like trading Tesla intraday, or at least I used to trade it a lot. I won't say I like to trade it, but I'll add it here. Those are two spots. The one that we are clearly, I mean, I don't think we need to draw, is 400 as a mental pivot. And then I would zoom out just a little bit more and see what we can identify in this area or in this range. No floors, just sideways activity here where it broke out from. I don't see any major price action or activity, anything like that. So for me, I think it gets interesting trading this to the downside if it happens. I won't put a signal or an alert here unless price, starts to break above one of these candles prior to the all-time or prior to the high right now, right? So I'll mark this as, what is that, 407? Let's call it 407.50. 407.50. If it gets close, then we can start talking about it. Try that one more time. And let's actually do this. 407.50. Extend right, lock figure, bam, and let's set an alert. I'm only doing this so that it lets me know if I need to start paying attention. Touch. There we go. Trigger 5 times, 5 days pass. Doesn't really matter. And I'll do the same thing here. If it starts testing this area or comes down to this line, then I'm ready to pay attention to it. There we go. Love it. Microsoft wouldn't touch it. Apple, same thing. Wouldn't touch it. Don't want to. Stay away from me. Costco, stay away from me. 100%. AMD, same thing. Stay away from me. Now, when there are days where there's, data that's going to help shape the market, most likely, when there's days like that that are upcoming, I don't spend too much time with the crystal ball trying to figure out what's going to happen the next day, right? Instead, I do what I just did here. I carry this understanding going into the market, and I know that once, you know, uh, 8:30 hits or 5:30 a.m. for me hits, if I would like to, I can start paying attention to that. If some of my alerts go, start to signal that price action has moved in that range or that area, well, then it gets a little more interesting. Now I can start talking about drawing some additional pivots based on what we've seen. But I'm not going to invest a lot of time into creating scenarios that I need to be prepared for. The way that you would trade SPY, by the way, given this scenario, or the way that I would do it, I should say, you already know. Let's say everything stays relatively the same. Price doesn't move very much, right? But the data comes out and price, let's say the market trades to the upside in the pre-market session. Well, obviously, I'm starting to pay attention to these pivots here, right? I want to pay attention to one, whether or not it breaks what happens in the pre-market session. The next thing I'd like to pay attention to is whether or not it breaks the intraday. I know this is considered intraday, but whether or not it breaks this high here. And as a matter of fact, what I'm going to do now that I see it, I'm going to take this, unlock the figure, and I'm going to bring that right here. To me, that's just more relevant than the one I had prior. So I've got those two spots. And if I'm noticing the price action is not trading above that, especially in the first few, the early minutes of the day, then maybe I look to trade that short. Same thing I do often. That's usually what happens with that trade setup I told you about earlier that I created. But let's say the market starts to we're gonna say sell off, even that's not the right phrase. But let's say the market sells that, right? And it's creating new lows. Well, then I have an area to look for as a bounce. The next, we got 602.50. We've got this as a previous pivot at 601. Obviously, 600 will be the next one. Let's just go ahead and create another one for the sake of having it there as a reminder. 600 right here. Bam. There you go. To me, that's all that's required. And I'll utilize the price action from there. There are no patterns that are going to do anything for you. There are no candle formations that'll do anything for you. When people talk about inside days, etc., I'm telling you, that stuff has its place in the market. And I'm not here to trash anybody that talks about or uses that stuff. Again, they have their place, but they are some of the weakest forms of analysis that you can have. And even aside from analysis, analysis is not the same thing as trading. So these are actionable tools, but the primary focus here, or the primary piece to that puzzle, has to be you and what you do. Now, you might say, I can't be around during the market open and market hours. I can't trade during that time, etc. That's cool. That's fine. Guess what? A lot of this stuff still applies, because if we're talking a few days out, right, for someone who cannot trade intraday, the way I would observe this is relatively simple. Once the data comes out, I'm going to start looking out on larger time frames. Now, swing trading anything like SPY is asking for trouble as far as I'm concerned. That's my personal opinion. If we're talking about swing trading names like Tesla, well, you might recall, only reason I drew this was because we were looking to see this. It's possible. We're not getting into swing trading today, but within the community and within the roadmaps and all that stuff, there are resources dedicated to that style of trading specifically. One thing that you cannot escape, though, is putting time in constantly. Don't care if it's an hour a day. Don't care if it's 30 minutes a day. Don't be lazy and do the bare minimum. But, I'm not your mother. I'm not here to tell you what you should and shouldn't do. Y'all are grown ass adults. The reality, though, is that there's this misconception that trading is this, you can have this leisurely job that's like, that you don't do very much in, and it's not gambling. The 2021 Robinhood gambling days, they came back briefly during the Nvidia run, and there will be more of them. But I guarantee you, people that made money during that time, they don't know when to quit. They kept going. They put their 2 weeks notice in, and they eventually went back and said, "Hey, can I have my job back?" Because the truth is, it's still work. It's still effort. The type of effort you put in might vary, but this is a requirement. I don't know how long I've been streaming for, but however long it's been, this is something I do pretty much once again in my sleep. Okay. I think that's pretty much it. I want to tell you some things that I said in the chat today, though. Are you ready? We're going to speed through these and read through them very quickly. No, I do not have app on the list because I do not like that. I don't like that chart. I don't want to look at that chart and I don't want to trade that chart. If it's a chart request, let's do it real fast. Only because you asked so nicely. No, I'm just kidding. She's chill. So that's why I'm going to do this. You know what I see? I see price returning back to where it was trading from sideways and that there's going to be a considerable amount of volatility. There's no actionable anything that I see. Nothing on the chart is actionable the night before, as far as I'm concerned. Because if it was, once again, I would take all my money out, and every person would take the mass, like the biggest loan out that they could, if it was a sure shot. And that's the first thing. Additionally, though, this I don't like at all. I do not like this price action whatsoever. I didn't like this pattern prior to this breakout is weak, and it traded sideways prior to seeing this happen. And oh man, I yeah, even the name, like I am starting to have these flashbacks to years prior. So the only thing a person could do is say, okay, it's revisited this area now, and now we got to start identifying some pivots here and try and put some. If I'm trading this intraday, or if I hold a position, I need to start identifying some concrete areas and some rules for myself because this name is trading with what looks to be a considerable amount of range, and you don't ever want to be a sitting duck there. As far as lows go, I mean, sheesh, 318. Holy crap. Yeah, no, this is all over the place. There's going to be no pivots that you could utilize as far as I'm concerned on these smaller time frames. We got to go into like the 4 hour chart and try and identify something meaningful if we were to utilize this one. So it would be either 308, 304.85, 310. Let's say 310 as a mental pivot because we've seen these bounces happen once price has cracked 310. So to me, that'd be the spot. So I'm gonna put 310. And actually, I don't even need to use this line here. I will put. Now, once again, this is with the knowledge that. Why does it do that? This is with the knowledge that everything else that we've said for other names is true. Whereas volatility can drastically change time frames and types of activity that you see. The one thing that I like about the way that I do things or why it works for me is the fact that it holds true even through volatility. But I'm telling you why I would leave names like this alone, especially when it comes to options trading. Like we can gamble our way through life and it'll get us, through trading, it'll get us some places sometimes. However, trading has that very strange thing of giving you these blinders or this rosy retrospection is what it's called in into how a trade went and what you could have done. You know, volatility changes that for people in the worst way because we get glimpses of what we could have done. We get glimpses of price action moving our way. We get glimpses of price going our way. And that leads to even worse decisions. So what I'm saying here is while this is very much a universal truth, all the things that I've been saying here and how price moves and how price works, or it's a mostly universal truth, the volatility can make this very, very difficult for a lot of reasons and for a lot of people. Now, notice how I moved the price action over, or I moved the volume over to this spot. It's an arbitrarily chosen place, right? The volume has been centered here. So even though this is one pivot, I'm going to have to clone this now and place this dead center of the quote unquote point of control because this is where the most volume is traded. So actually, here's my thought process, right? I mean, this tells you, it says potential bounce. It says if broken, look for pivot below. This spells it out for you right here. I'm going to change the color of that. And if this cracks, I mean, I would be expecting price to visit this area, all things, most things considered. right? Breaking the mental pivot, I'm looking for where the volume has been concentrated over this span, this last month and a half almost, or this last, 6 weeks. Potential bounce area. I'm going to change the name of this and we're going to call this something else. I know it's a potential bounce, but instead, let's say potential bounce area in parentheses, November, December point of control, lock figure. And I'll see if I can get this to be a little more accurate. Let's try and tie this to something that we can actually see on our chart. And that might be a little tough to do. Nope. If we're talking bounces, though, I would say maybe this combination of support from these individual candles here, 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 and here. What is that? 278.70. I would even place a, I'm going to call it 280. That's the only like solid analysis I would give this. And if I went to maybe month to date instead of, what I see with my chart here, the reason I'm not using only month to date is because not only has price already broken below what the volume was here at this spot, but it is hanging out now where it consolidated for some time. I don't think you can analyze this with only the volume on the month and completely disregard what's right next to it. There you go. Hopefully that answers your question. But to me, these are the only two notable spots, especially when dealing with a name that has that much volatility and very likely a lesser amount of liquidity. If we went into the options contracts, that's another thing that you could do. And I'm only going to do this one time because I have no affiliation with bar chart. Nothing against bar chart whatsoever. You've seen me use this in the past. I think bar chart is cool. I think what versus the market has is a lot cooler, but I'm not going to show you guys that right now because we don't need a lot of excitement going into the evening or going into the close of day. So options market. Let's type in app. Oof. Swear I'm not hating. I just, holy crap. Could we not do it like that? Thanks. Could you be any slower? Okay. All right. So we're here. Implied volatility is 67. Interesting. Today's options volume, 75,000. That's not a lot. Higher than the 30-day average, though. Interesting. Okay. Well, that's it. Let's have a look at the chain. Actually, I'm curious about. Oh my gosh, we do not need advertisements. So we're here just this week with options expiring 12/13 Friday. We got stacked near the money. Implied volatility, for this in particular, like for this strike in particular, or for these strikes, 83.78% IV. That's nuts. Absolutely insane. Coming hot off of earnings. That's always great. You are looking at IV crush coming to get you. Basically, the excitement is dying down. The fanfare is dying down. That's what that says to me. Again, I'm not saying that you have to think of it that way, but that's what pops into my head. That's what I'm thinking of. Also, bar chart, pay us, send us some. I don't know if people use any of this stuff, but if you're currently paying a subscription or you have something like this, yeah, pay us for this quick shout out or pay me or give us some, don't give us memberships. We don't need it. We don't want it. Thanks. That sounded awful to say, but we just don't. We don't need it. Let's use 20 strikes. I want to see how this looks. And I can't see the volume individually or the volume overall for each of these. That's strange. Let's not look at stacked. Let's look at side by side. Thank you very much. Now let's go back to stacked. I don't like it. And we're going to do 5 strikes, plus minus. All right. Price currently is what now? 318. Volume for just this week. That's all I'm saying is this week. Call options. That volume is terrible. We're going to need to do near the money then. Volume for this week, god awful. Put options volume, incredible by comparison, right? 300, 320, and 310. So 320, 310, and 300. If I go to this chart and I look at price and I were to just, one of these real fast, maybe I'll make an annotation and save it. Let's use, I don't know, what color should I use for this? I'm not going to use anything. I'm going to clone this in 3 different spots. And I'm going to put, for one of them, I'm going to put 300. I'm going to take this and I'm going to place it right here as a reminder that there was a considerable amount of options volume that I should go back and pay attention to. And what do you notice? That's also where we have a considerable amount of support is just underneath our potential bounce area. So let's make this bottom left. Great. This is how I would do it. It would serve as a reminder that in the midst of all of this other nonsense going on, that we've seen a lot of options activity here. And funny thing about options writing for this week, as you know, options writers don't want you to cash in those most of the time. Most of the time, they don't want price to go there. So I'd be looking at this saying, well, there's maybe some further downside, but there's a lot of options activity on the put side here, which means that if a lot of people have purchased put options, I'm going to think to myself, well, maybe there's some chance that price doesn't end up in the money or these options don't end up in the money by Friday, right? The goal here as an options writer would be for them to expire worthless. See? But that's another story for another time. Buddy, I could talk about this stuff for weeks without stopping. But that's it for us because I'm hungry. Hope this helped, and I will chat with you guys on the next one. Once again, these streams are soon to be exclusive to Stocks Pilgrim versus the market and versus the market.com. So if you benefit from any of this, make sure you either are signed up on the waiting list or send versus the market a DM or send, I mean, you can send me a DM, but versus the market DMs it'll get done faster. I'm just saying. And I'll chat with y'all next time. Good luck and trade smart. Peace.